the major bullion banks are being unabashedly bullish. And if they're looking to pull the rug on you, well, they're going to have to pull the rug on their bigger clients first. I don't think this is, I think we're looking at a cultural change in the bullion banks.
Welcome to the Morning Markets and Metals with Vince Lanci, where each day he brings you the precious metals and financial news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and in today's market rundown, we're going to talk about Citi's new price targets. We'll touch on that here, and we'll discuss it more at length in the premium section. We're also going to talk about Barrick mines and a new problem that they're running into and the implications for the mining industry in general. So let's check on the markets first, and then we'll get to those items. We have some news items as well, probably worth looking at. The dollar is down 20 at 106.17. The 10-year yield is down 1 basis point at 465. Stocks are stable, up 15 handles at 50.67. The VIX came off yesterday and continues to come off a little bit. 1795, down 44 basis points. Gold is up 6 and change at 23.88. Silver is up 41, undoing a lot of yesterday's move at 28.47. Copper is at 432, up 4 cents. Oil is down 38 cents at 85.18. Natural gas is 163. We're at the lower end of that range now. Bitcoin is down 814, 62,995. Ethereum is 3068, down 50 basis points. Platinum, palladium are both up. Palladium is stronger, 1027 and 960 respectively. Grains are, call it flat, with wheat up 4 cents. Soybeans are flat. Corn is flat, 1144, 426, and 564, soy, corn, and wheat respectively. All right. What are we going to do? We're going to talk about a couple things. There's the gold fix front page, banks selling, China. This is the preview of what we're going to talk about today for premium. And we actually have got our hands on a book or two. Subscribers will understand what I'm talking about. You can check in the story itself. All right, let's start with the main, with the topic, the money topic, right? Citibank put out an update of a report yesterday, and they made sure that the news media got it, I should say. And CNBC talked about it, and the $3,000 was in the headline. We gave you that as well, and we're not diminishing that headline. That's actually an appropriate headline. We got the update yesterday, and then we're going to share that with premium subscribers and give you a little bit of a preview of it here. Okay, the bank upgrades its baseline gold price forecasts to bull case scenario from the 2Q commodities outlook and Wildcard's 2024 report. What does that mean? The second quarter 2024, 2023-24 commodities outlook report, which we have here, they updated their bull case. They raised their price targets. Wildcard's 2024 report, that's something that Citibank does proprietarily. They have a geopolitical macro report that we don't see that report. We see the updates on it once in a while. And that report gives if this happens, then we could have a spike up to that or a drop down to that. And that's where their 3,000 price wildcard spike was last year. Gold's going to go up, but if this, and this happen, you could have a spike to 3,000. And, we covered that as well. However, this month, they've kind of moved that wild card out of the wild card 3,000 and into the commodities outlook update itself. So what you're kind of seeing is a gradual raising of the target in steps or fits and starts. Anyway, next sentence. For 2024 estimate, this means a 6.8% bump to 23.50 per ounce. For 2025, this means an admittedly massive 40% upward revision to 28 75. Then we'll talk about the 3,000 and 2,400 and what that means in the context of the rest of the report. But suffice to say that the major bullion banks are being unabashedly bullish. And if they're looking to pull the rug on you, well, they're going to have to pull the rug on their bigger clients first. I don't think this is, I think we're looking at a cultural change in the bullion banks. They may not be bullish all the time. They may not be long all the time, but they have clients who want to have gold on their books. And as we'll see in the report, the client business is what drives the bank business. Let's move on to Barrick. Okay, now there's an article on mining.com as adapted from the Globe and Mail. We're going to read a paragraph or two of that, and the whole thing will be here for you to read on your own. But I think since a lot of people are in mining in this community, I'm going to give you some commentary that'll help you hopefully guide through this in your decisions going forward without telling you what to do. Okay, so here's the beginning. Barrick under pressure in Mali as regime eyes control of, I'm not sure how to say it, Luolo Goncoro. Barrick Gold, TSX, ABX, and NYSE Gold is under increasing pressure in Mali as the country's military regime seeks to tighten its grip on the lucrative mining sector, the Globe and Mail reported. After seizing power in a coup in 2021 and forming an alliance with Russian mercenary Wagner Group, the Mali junta has been focusing on the mining industry. They conducted an industry audit and introduced a new mining code aimed at expanding state control over mining companies. Recent reports suggest that the regime may be to seize control of Barrick's key mining complex. There's that word again, one of the world's largest gold-producing mines. Barrick has declined to comment. Now, here's the rest of the report. Rest of the news item, I should say. I'm going to read you some comments. These are my comments. These are my opinions that will help you think for yourself, hopefully. Okay. First of all, for every financial sanction, we're going to start geopolitically and work down to the company, okay? Geopolitically, the BRICS are sanctioning us by restricting metals, by holding back on collateral, by saying, hey, we can't use your monetary platforms. You can't use our natural resources, right? You can write 1,000 words on that alone, right? Next bullet, natural resource protectionism is a function or a feature of mercantilism. When people aren't as friendly with each other, they tend to not share as much. Same thing goes for nations, and mercantilism and protectionism are the same thing. Now, you will share, the price goes up for sharing, which brings us to Mali in general, how warlords operate. Warlords operate, again, this is another long article that I'm not writing today. Warlords operate differently than democracies. Now, this is actually very material. Democracies like to create businesses and add value to those businesses. Their balance sheets, their income statements are earnings per share, right? Warlords operate with cash flow. Warlords sell the materials raw to get cash flow to support the empire. So both empires are supported different ways. So warlords need to extract more money from natural resources because they're not building things with them, right? What they're building is their military strength and their power. So Barrick is caught in a situation like that. Barrick is in a negotiation. That's why they're not commenting. It's a blackmail. The price is being raised of doing business there. That's how it works in a warlord country. You either deal or you do not deal. You either pass on your costs or you do not. The other reason Barrick's not going to comment right now is because it's a negotiation is because other countries are watching. Other countries are thinking about doing this. Other countries are already doing this. Okay? This is a present. This is a present from Putin. That's what this is. Okay. Mining in specifically. Now, I started out as a fundamental analyst in training on Wall Street at Lehman Brothers. Now, I was never an expert in mining, but I understand businesses that depend on production scale and international in general. So I'm not going to pretend to hold out to you that I'm a mining expert, but at this point in the world's evolution, if you get the big picture right, that's 80% of the work. The last 20%, which I've done, hopefully correctly, the last 20% is up to you to do. And that 20% is find the right companies. So mining risk, Panama, copper, Ghana, gold, Mexico, silver, Russian gold. Every country that's on the ideological border between the West and the BRICS is reevaluating its relationships. And that means it's getting more out of it. If you're a country like Mexico or a Latin American country, you will tell your workers to go on strike for a pay raise. Boom. Or you'll adopt some woke thing like Panama and say, oh, we don't want to destroy the environment. Pay us more for our copper. Okay, if you're in Ghana, you go to Newmont and you say, you know what, guys, we're not using dollars anymore. We want you to sell your gold directly to us. Okay, a portion of it if you want to keep operating here. Everyone's getting their pound of flesh a different way, right? But the goal is the same. Make more money off of your natural resources. G7's doing it as well, if you don't think they are. Italy is restricting export of its gold. You can't get your gold out of China. You can't get your gold out of the U.S. unless you're approved. Now, the point is there is a need of appearances of a free market. The market's not free anymore. A little bit cynical. Okay, going on. Now we get into the industry itself. All right. Much of this has already been discounted in stock prices. This has been going on for years since COVID. Everyone looks at these miners and says, there's other reasons too. Everyone looks at these miners and says, international risk, supply chains fragmented. I don't think these guys are in a good position to benefit from that. Okay. Good companies, however, are unfairly beaten down by across-the-board selling. The people who play in the mining space, unfortunately, are not very sophisticated. And because of that, many of the people, not all the people, because of that, they don't sell the bad companies. They just sell it all. They don't know who the bad companies are, right? Okay. Next, who are the good companies? Well, I don't know who they are, but I know what they have. They have strong ties to local government, where the mine is, right? Whether it's an American company overseas or an overseas company overseas, or a Canadian company in Canada. An ability to scale distribution vertically. Now, there are a couple companies I have in mind that are doing that now, but it's not easy, and you have to have some good management to do that. Vertical integration plans. Actually, I would call it virtual vertical integration plans. You want to have your mining tied to your refining, tied to your distribution, but virtually. Partnership with government would be a good idea if you can do that. And you also want to have a grasp on technological implementation to do those things. Now, these are big picture things. The management's got to be good. They got to know how to do that. Number two, their finances have to be secure. That's it. Now, if I were a big mine, I'd be looking for one of those companies to buy, right? If I were a medium-sized mine who could do those things, I would be just doing them and building out my distribution, because you want to be self-sufficient. It's all about self-sufficiency now. Unsophisticated investors are the problem in mining, and they create the opportunity, which is what I alluded to before. Banks do not promote miners for a reason. It's about the metal price. That's all I'm going to say about that. You can read the rest of that story below. Price action. Moving on to price action. Beach ball time for gold. I said that yesterday. Yesterday, I said silver's leading the pack, but it's not so obvious now. I might not be right about that. Looking at a couple charts, I'm rethinking that. I think silver will lead the pack when we go up, but it will chop around. It's a hard call. I'm not sure. Miners, we already talked about those. Oil touch and go. Bitcoin still looks weak. Stocks, there's a problem. VIX manipulation. If I were the government, I wanted to keep stocks up to keep everyone happy, especially going into an election. I'd make sure the price of VIX goes down. The easiest lever to prop up the stock market since 2009 is the VIX. If you sell the VIX and you keep the VIX low, if the VIX is low, whether it be legitimately or artificially, then you make protection of the downside easier and cheaper to buy, which means fund guys are less nervous. As a barometer, you basically take the tail and wag the dog with it. And you can do that for months, years at a time. I lost a lot of money between 2009 and 2011 selling rallies instead of buying dips. Bonds, YCC is coming. I still believe that. Dollar 2025 will not be kind if YCC comes. That's just something on my radar. Market news. Out with the old, Wall Street gains at Main Street's expense, offshoring services, onshoring of manufacturing. So as we build manufacturing here, our service companies are going to go overseas. There's a rotation industry-wise. Okay, out with the old, commercial real estate's just going to continue dying. Wall Street gains at Main Street's expense. When you hear bank earnings are doing really well, that's because Wall Street's gaining. And when you hear your buddy down the street is getting laid off from Microsoft because they're going overseas, that's because it's at Main Street's expense. There's a lot more on that as well. We'll do data and we'll just take a quick look at the charts. Okay, data today is the beige book. Important, little understood these days and not digested immediately, so you shouldn't expect a knee-jerk reaction on it. However, the Silver Institute report is supposed to be out today, and people are looking for that to drive silver higher. That's already in the market. I mean, it could, don't get me wrong, but, you know, these things don't stay private. If it goes down in the market, if it comes down in the market rallies, that's great. And in premium, which stay with me, we're going to talk about that in a second. We're going to talk about the Citibank report. Okay, gold. Here's an hourly chart on gold. See the hourly chart on gold? There's your trend line lower. This line here, I'll tell you why I drew it. This is where technical analysis comes from. The market goes up. Gold, right? No. Test it. Test it. This is the first hour that it makes a decision it wants to try it. And of course, it finds more selling up here. But the point is, this is the area it pauses, looks left, looks right, and makes a decision. So this is my area now. Okay? Until we get above that, you're not a buyer. If you're already long, you're long. But until we get above that, you're not a buyer. If we get below this, you should be short-term bearish. But, this buying down here, no way, man. I mean, if it goes down here again, maybe it won't hold, but I have a feeling that, this line isn't crucial, but it is someone who's buying it. So there's buying in here, very algorithmic type buying, and there's probably fundamental buying down here. Moving to silver, similar structure, but not as steep on the line, right? Okay, so same idea here, but if I were a bear and I wanted to crack gold, I'd crack silver because the line's not as steep, the market's not as algo driven, and doesn't have far to go to test that area again. That's it. Okay.
Thanks for watching this morning's Markets and Metals Update with Vince Lanci. Brought to you each day by Miles Franklin Precious Metals, where this week's special is junk silver for only $2.75 over spot. Junk silver is the pre-1965 dimes and quarters, and one of the products where we did see premium spike in the past couple of years. So you can find out more by calling us at 833-326-4653 or emailing arcadia@milesfranklin.com. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.